It is Christmas Eve, 30 minutes until the start of the cash trade after a blowout GDP number. I'm Matt Miller.
And I'm Vonnie Quinn stepping in for Danny Berger. Bloomberg Open Interest starts right now. Way back there again.
Coming up, a weight loss game changer. Novo wins FDA approval for a Wegovy pill that it launches next month.
A billionaire's bet with his fortune on the line. Larry Ellison's more than $40 billion pledge to back Paramount's bid for Warner Brothers is a gamble that could reshape his wealth.
And no slowdown here. U.S. economic growth jumped to a two-year high with GDP up 4.3%.
You know what else, Matt? Shares of Tesla near a record high, the company convincing a Texas judge to transfer a lawsuit over self-driving vehicle patents to Northern California.
All right, $486.70 a share on Tesla. Another stock to watch is the weight loss drug maker we mentioned, Novo Nordisk, getting a boost after winning approval to sell a pill version of its blockbuster obesity shot Wegovy in the U.S. It's been a huge loser if you look at it compared to Eli Lilly, so maybe it's catching up a little bit today, up almost 9%. And the CEO and president of Novo Nordisk spoke with Bloomberg exclusively in the last hour.
I think the market will expand quite a bit, actually, for many of these people that have just been waiting and seeing the injectable versions of these GLP-1 products taking the world by storm.
For more on Novo Nordisk, we welcome Bloomberg Health reporter Madison Muller. And Madison, how much of an advantage does this give Novo now if it takes Eli Lilly months to bring out its own weight loss pill?
Hey, Matt. Yeah, it definitely gives Novo a bit of an advantage, but we have to remember that Novo is coming from behind here. I mean, they've really struggled, like you said, the last year plus. And so while this is a much needed win for them, Lilly is really close on their heels with their own version of a GLP-1 pill. And so while Novo has a little bit of a head start, they're really going to have to put in some work to make sure that this head start, gives them that much needed boost that they have been going after.
Madison, what do we know about side effects and whether they're any different with pills versus injections and whether that might, convince people to move to the pill?
Yeah, I mean, the side effects are actually pretty similar. I mean, we're seeing the same nausea, vomiting, diarrhea that we have talked about on this show before. Patients are still getting that. The pills don't really help mitigate any of those side effects. However, for the people that are maybe scared of needles or who get some injection site reactions, some soreness, some skin sensitivity, the pills offer another solution. However, we have to remember that the pills are taken every single day, whereas the shots are taken once a week. So for people that maybe don't like to remember taking something every single day, I mean, that's personally, I don't love remembering to take something every single day. The shots are maybe a better option for those people.
I guess it depends on how motivated you are sometimes, Madison. Thank you so much. That is Bloomberg's Madison Muller, and those shares are up almost 10% right now. Tesla hovering near record highs. The stock boosted after a Texas judge transferred a lawsuit over self-driving vehicle patents to Northern California. For more, we welcome Bloomberg Tech co-host Caroline Hyde. These shares just go in one direction, it seems, Caroline.
Yeah, they're a little bit weaker on the day, perhaps a bit of profit taking after we got ever so close to a record high, and many thinking that the $500 mark is the next line of sight. There is a wall of worry around this stock, though. We've got anxiety that this is going to be a second year where we're seeing actually a fall off in deliveries from this particular company. But almost EVs put to one side. Look, there's another deep dive coming from Bloomberg as well about the implications of the car handles within the Model 3 in particular. That all comes down due to the reporting of Ed Ludlow as well as David Welch, showing that this really came down to Elon Musk himself thinking that fewer parts is better. And therefore, we're seeing the implications of that, where they've found that at least 15 deaths are being to blame for the fact that you can't get into a car once the electrics have gone. Despite all those anxieties, we're instead focusing on a future of humanoid robots. We're focusing on a future of robo-taxis. Why Wedbush, Dan Ives thinks this could hit in excess of $500. Why analysts are upgrading their stock price targets, even though they're downgrading their delivery outlooks. And it all comes down to the future that Elon Musk can paint. And particularly when you saw yesterday Waymo get knocked offline over the course of the weekend with its robo-taxis, that looks like it's a bit of an in to Tesla, and in fact that it's still a little bit of second place in this particular space.
Yeah, I mean, I always find it fascinating that people think deliveries matter. Yeah. This isn't This isn't a car maker valuation, right? It's a company worth $1.6 trillion. That's more than Toyota plus Ford plus GM plus Volkswagen plus every other car maker in the world. So it's all being valued on robots. This is all about Dan Ives' call on robots, not about the cars that they make.
It is. I mean, I think if you spoke to Tesla, they'd be quick to say, we do have the best-selling car in the world, remember. And I think that they want to show off the prowess of what they've already built, even though we all like to say, well, the car deliveries have been bad, you've had a tough year. They really want to pinpoint that. Actually, they've still got a fair amount of success, but you're right, it's all about the future.
They don't even sell 2 million cars a year. Yeah. You know, that's nothing compared to the big
and the
car
1
makers.
million humanoid robots they want to have in our hands in the next 10 years or so.
It's amazing how many days out of the year we speak about Tesla, but it's also amazing how many days out of the year we speak about Nvidia. And today we're going to do it again because that probe into what could be illegal importing of Nvidia's chips. How is it proceeding, Caroline?
What an extraordinary deep dive done by, we've got to shout out to Mackenzie Hawkins and team over in Asia. This has been such a thoroughly reported piece, and it's all surrounding basically the biggest importer of Nvidia chips in Southeast Asia that have just erupted out of nowhere in the last 3 years or so. It's called Megaspeed, and it's a company that actually spun off from a Chinese gaming company. Hence some of the anxiety that maybe there's still closer affiliations with China than people are really making out. But thus far, it seems as though there's an investigation going on from the US government. Nvidia themselves, time and time again, has said there is no illicit importing of our GPUs into China that we are aware of. They've done a lot of investigation into the manufacturing units and the data centers of these companies.
Is that skepticism, Matt?
I mean, don't we all know what's going on? Doesn't NVIDIA management know what's going on? Don't they read the New York Times? Don't they see these chips in use in Chinese applications?
Well, Jensen Huang would say that they've been into these data centers, and from what they can see, what's been imported by Megaspeed is being used where they seem to be saying it. But the investigation by Bloomberg says, no, there is a lot yet that really seems to be identified. An awful lot of these chips, yes, they could be in Malaysia and Singapore, as you seem to identify, but there seems to be some cross-pollination going on, particularly in marketing tools of one particular China data center. It seems to be equivalent of what Megaspeed has been identifying and a build-out of its own. So the question is this Southeast Asian importer actually getting the chips, particularly Blackwell chips? I'm not just talking about H100s or ones that, even H200s, which now the president thinks that can be going to China in the future. What does that mean for Blackwell getting into the most sophisticated Chinese operators? But it's also notable that maybe if H200s get to China, maybe companies like Megaspeed aren't going to be necessary anymore.
Well, and that's it. By the time we find out the actual truth, will it even matter anymore? Because we already have gone beyond all of this. Yeah.
We're all shocked to find that there's gambling going on here. Caroline Hyde, co-anchor of Bloomberg Tech, thank you very much for joining us. You can catch that show with Caroline and Ed Ludlow at 11. Turning to this morning's economic data, the U.S. is expanding in the third quarter at the fastest pace in 2 years. The data bolstered by resilient consumers, business spending, and calmer trade policies. Calmer than you are, dude. Joining us now is Bloomberg U.S. economy reporter Katerina Sareva. Katerina, what's behind this? 4.3% is the highest we've seen in a couple of years here. What's the big driver?
Yeah, it was the consumer, which has really been propping up the economy all year. Of course, it's always, a big part of economic growth. A consumer accounts for 2/3 of our economy. But yeah, we saw really robust consumer spending in the third quarter, and also business investment. I mean, those, the investment in AI centers, that has continued to be very strong.
Now, this isn't a pull forward of spending anymore, right, Katerina? This is fresh data. Tariffs are sort of in the rearview picture for this, and this is current spending. So why should the Fed need to do any more?
Yeah, I mean, this is kind of a rear view mirror data point, right? It's for the third quarter. But I think it does tell us something interesting that I think the Fed will look at as well. It shows that there is a lot of momentum in the economy, and that's going to probably continue, a little bit into the fourth quarter, although, of course, the government shutdown will impact those numbers. But it just shows that things were moving pretty steadily at a time even when we saw employment decreasing or slowing a bit, right, over the summer. Even though that was happening, you still had really robust consumer spending. So I think for the Fed, it just tells you that the economy is strong, people are out there spending money, and that could mean that you have inflationary pressures that are still kind of simmering under the surface.
All right, Katerina, we shall know more in the next several weeks. That's Bloomberg's Katerina Saraiva. Thank you so much. Let's get a check on futures now. We're just 21 minutes before the open, and honestly, futures were higher a few hours ago, and they are taking a dive, actually, down 0.2% for S&P 500 futures. But bear in mind that index is actually within 1/3% of its record, and the Nasdaq 100 is up 21% year to date. So perhaps this little stumble is just that, a stumble. In terms of bonds, we are seeing just a little bit of a dive in yields as well, down about 1 or 2 basis points. Crude oil really unchanged. We're still above $58 a barrel on New York crude. And then maybe more of the action is in currencies today with a stronger yen. We're at 156.44, although it's creeping higher once again, Matt. We had seen that below 156 earlier in the day. Yeah. And copper, yep. Yeah,
we're seeing yields actually up 3 or 4 basis points. So right now, the 2-year is at 3.54, the 10-year about to be 4.20. And that is because this GDP number means fewer people are expecting a rate cut in January. Let's get a look at some of the individual movers on our radar. Shares of Huntington Ingalls rise after President Trump announces a new class of warship. The Trump class, of course. The Navy is pursuing a new frigate that will be built by the company.
Shipping company Zim says it's continuing to evaluate proposals from potential buyers.
And a recent SEC filing showing Rocket Lab insiders sold shares worth more than $1 million. As a result, Rocket is down almost 6%. Coming up, Larry Ellison's $40 billion pledge, how his wealth could be reshaped if he backstopped Paramount's bid for Warner Brothers, which he did. This is Bloomberg Open Interest. Let's get out of high interest. Look what's making headlines around the world. The Justice Department released another batch of Jeffrey Epstein files as pressure mounts under a new transparency law. This trove includes thousands of pages tied to Epstein investigations, though heavily redacted, ostensibly to protect survivors. Critics say, though, that the Trump administration is withholding records despite Congress mandating full disclosure and redacting too much. More files are expected to come in the next few weeks. President Trump is warning Venezuela's Nicolas Maduro not to challenge the U.S.
He can do whatever he wants. Whatever he wants to do. If he wants to do something, if he plays tough, it'll be the last time he's ever able to play tough.
The warning comes as the U.S. intensifies a blockade of Venezuelan oil shipments, escalating pressure on the country's main economic lifeline. And Larry Ellison's pledge to personally backstop a $40 billion Paramount Skydance bid, the equity portion of that for Warner Brothers, could fundamentally reshape his fortune. The move may force the Oracle founder to trim his long-held stake and shift billions into riskier, debt-heavy media empire run by his son, Vonnie.
Matt, let's take a closer look at this story, because here's something consoling for you. His fortune has increased by $60 billion since January 1st. So if you were to look at it that way, he's really only backstopping what he's made, a little bit less than that even. But joining us now to explain more is Bloomberg wealth reporter Dylan Sloan. So if he has to remake his fortune by backstopping this, explain to us how that would work.
Yeah, and to start off, you said it first. I mean, Ellison can clearly, he can afford the money. He's the world's third richest person. He's worth around $252 billion, so he can afford this many times over. But one of the interesting things about Ellison's fortune is that more than comparable tech founders, he holds a much higher proportion of his wealth in stake in his company. Historically, he's relied on dividends. He's relied on taking on debt against shares of his company to raise cash. So in the instance that he was called on to pony up the full $40 billion plus to backstop the equity portion of this deal. It could force him to turn to, measures that he hasn't turned to before to be able to raise that cash, selling more shares than he has in the past, taking out additional debt, and also, of course, it would shift a significant portion of his wealth to this, as you said, new, relatively unproven company led by his son.
So what are the mechanics of how this would work? Like, under what circumstances would he have to actually give money from this irrevocable trust?
Right, exactly. So there's been plenty of back and forth and, multiple versions of this deal. Previously, what Warner Brothers Discovery's board took issue with was the fact that the equity portion of this deal was backstopped by a revocable trust under his name, which they said didn't constitute a full guarantee, and they weren't certain that would, fully protect them and their shareholders. This newest version of the deal announced yesterday is a full personal guarantee from Ellison himself, and he'd only be called on to provide the full $40.4 billion equity portion of that backstop in the instance that other equity investors in the deal for some reason backed out. Bloomberg's previously reported that there's a number of Middle East sovereign wealth funds that are involved. Redbird Capital Partners is also involved there. So it's far from a certainty that he would be called on to provide that full sum. But in the event that he was, it's about $40.4 billion plus some legal fees.
By the way, Dylan, Middle East involvement is something that I think Paramount initially pledged would not be the case. How did that change?
Yeah, so this most recent version of the deal has trimmed back a little bit on the initial list of investors. Previously, Affinity Partners, Jared Kushner's hedge fund was involved. They're no longer on the deal. Previously, to assuage some concerns about potential intervention from CFIUS, the U.S. Agency on Foreign Investment, there was a guarantee that some of the foreign investors wouldn't have any voting rights. But as of right now, many of those have been trimmed back, and really it's designed at keeping Ellison and Redbird as well as kind of the primary equity backers here.
Look, obviously, Oracle shares are far off their all-time highs, but they are up 19% year to date. Why is the board, a little nervous about this in the sense that he could just sell some Oracle? It's not that big of a deal.
That is true, but one of the things that's different about Ellison is that he has historically really not sold many shares of Oracle. What's really fueled his rise to become one of the world's wealthiest people is that he has been a long-term holder of Oracle stock. He's only sold about $7.5 billion lifetime in total. He retains a far higher stake of Oracle than many of his peers. For example, Mark Zuckerberg owns about 13% of Meta. Jeff Bezos owns about 8% of Amazon. Ellison owns 40% of Oracle.
His babies, he's going to choose his actual baby before Oracle, right?
Right, exactly. And I think in the instance that he were to sell shares, he hasn't sold more than $1 billion of shares in a single calendar year since 2010. That would constitute a significant shift for him. And like you were saying earlier, putting, up to $40 billion worth of his net worth in Paramount, in this company, would be a big shift for him away from Oracle and towards this, not just a new company, but a new sector entirely.
All right, excellent story, fantastic reporting. Dylan, congratulations on that. Dylan Sloan there wrote the story on how Larry Ellison may be reshaping his wealth for this takeover battle. Now, check on futures ahead of the opening bell. As Vonnie pointed out, we were flat and are now down. The move is only 0.2%, and it comes after 3 days of gains. But it's very interesting to see after the strong GDP number comes out, it looks like investors are no longer betting on gains in the stock market today. Coming up, JoAnne Feeney, Advisors Capital Management Portfolio Manager and Partner, joins us for her 2026 market outlook. This is Bloomberg Open Interest.
The portfolio managers I talked to are looking for value, right? And that was sort of the crux of our sector report this morning. And I think there's some debate over where that value lies. I do think there's a general sort of itch to rotate away from the old leadership. Kind of the first wave of the AI beneficiaries, things like industrials are quite expensive. Tech has looked expensive on our work. Not all parts of tech, but the semis space specifically.
That was RBC's Laurie Calvasina speaking with us yesterday here on Open Interest. And joining us now is JoAnne Feeney, Advisors Capital Management, Portfolio Manager and Partner. So based off of what Laurie was saying yesterday, JoAnne, where are you finding value right now?
Yeah, good morning, Vonnie. There are a lot of opportunities out there in the market if you look past the top 10 companies in terms of pure valuation. And even at the top 10. It's important not to look just at 1 year's worth of earnings to justify where those stocks are trading, but to look at multiple years because all those companies are really heavily exposed to the significant growth that we're seeing. But value can be found in the energy sector. There are certainly values in real estate, in financials. Healthcare has underperformed for quite a while now. We think that is an area where investors are underestimating the earnings power of these companies. So, look carefully, look hard, which is what we do, because we don't invest in the whole market for clients. We pick about 40 or 50 stocks per strategy. And there's certainly a lot of value to be had out there.
What are you most worried about right now, JoAnne? I mean, we got a strong GDP number. We got relatively low inflation print, noisy as it may have been. Things look pretty good. Where do they worry you?
Yeah, there's still plenty of worries even to be seen in those good numbers. I mean, look at the GDP price data that we just got this morning, hotter than expected. The GDP strength that we saw was largely due to net exports going up, which tells you that those tariffs are biting on imports. That's not a terribly good sign. You have to worry a little bit that wage growth is slowing down. And as many are saying, the full impact of those tariffs has yet to be seen. So you asked me to list the worries. There are plenty of them. Add to that the fiscal deficit, likely to keep long-term interest rates roughly where they are.
All right, JoAnne, hold those thoughts because we're going to be coming back to you. That is JoAnne Feeney of Advisors Capital Management, and she is sticking with us. I want to check futures ahead of the opening bell. We're just less than 5 minutes away from that open, and it looks like we have futures really close to their session lows now, pointing to declines for the Dow, S&P 500 and NASDAQ 100. Interestingly, the Russell has been outperforming those two benchmarks over the last few days. We'll see if that holds today. As we can see, Russell futures are actually pointed even lower. Everything could change, though. We'll have to wait and see. The GDP data obviously percolating through this market, as well as the claims data. And, of course, we also just have, 2 more days of trading before the holidays.
Santa rally.
Yeah, we had that Santa rally. Maybe it's over already. It's not supposed to be over. We're supposed to have another few days.
Be optimistic. We still get the first 2 trading days in January as well. We're right back with the opening bell on the other side of this break. This is Bloomberg. All right, we are moments away from the start of trading on this Tuesday morning, shortened holiday week. Obviously, Christmas coming up day after tomorrow, and we've had 3 days of gains today. Not the case. We're looking at futures that are down about 0.2% on the S&P. NASDAQ futures also down about 0.2%. Russell futures down 0.5% as the odds of a rate cut are reduced with a GDP number out. It is a third quarter number, but the first reading at 4.3%. Strongest growth we've seen in a couple of years. A couple of ETF bell ringers here on the New York Stock Exchange. You've got Quantify Funds with its BTGD. That's an ETF that aims to give you exposure to Bitcoin and gold. Since October of 2024, when it came out, it's up 82%. So great return there. Down at, wait, that was the NASDAQ. This is the New York Stock Exchange. It's like my world has completely changed. This is Peerless. I don't know what they were staring at there, but they have an ETF, WEEL, as you can see, which is also up since I think May of 24 when it came out, but only about 22%. Better than a stick in the eye, as my stockbroker always says. In terms of the stocks that we're watching, Vonnie has big gain there for Novo Nordisk.
Right here, exactly. Novo Nordisk surging. We know why. The FDA approved the sale of a pill version of Wegovy. Novo can start selling the pills in the US as early as next month. We were talking with the CEO a little bit earlier. Very excited about that. Of course, as a new CEO, just got into the position back in August, so he has a lot to prove and he is getting a great start. Those shares, of course, had taken a huge nosedive as opposed to Lilly shares, which had really outperformed. Matt, I know you were making that point earlier, but certainly today, the CEO will be happy with those shares up 9% on that news.
Yeah, I always look at, Vonnie, the comp function on the Bloomberg terminal defaults to a 5-year period. And if you put Lilly in there against Novo Nordisk, Eli Lilly has beaten Novo by 530%. So the outperformance is absolutely massive. They've got a long way to go to catch up. Shares of Tesla, as we've been talking about, near a record high. The company convinced a Texas judge to transfer a lawsuit over self-driving vehicle patents to Northern California. I'm not sure how that affects those shares, but the point is, at $490, they're valuing the entire company at more than $1.6 trillion. So Tesla has just an absolutely massive market cap for a company that, for the most part, makes money with cars. Let's bring back JoAnne Feeney, Advisors Capital Management Portfolio Manager and Partner. And JoAnne, just to recap, the GDP blowout this morning was pretty astounding. 4.3% the U.S. economy grew in the third quarter. Is that too backwards looking for you, or is that still an important data point to watch?
It's definitely an important data point, Matt. As I was saying earlier, net export increase was 1.7% of that. That's a big number, and without that, I don't think this number would be shaking people up so much. That's really a result of the tariff policy, and that's not a terribly good sign. But what is good is what's happening on the investment front, and we're certainly seeing a lot of dollars pouring into data centers and into the services folks that help to engineer and build those data centers. So, we're certainly seeing the AI move spread across the economy and show up in these GDP numbers.
Well, I know, JoAnne, that you've been looking at, perhaps maybe not the obvious AI plays. So Broadcom, for example, and Palo Alto Networks are two of your picks. Are they still your picks going into next year?
Yes, they are. Broadcom we've held since it was Avago 10 years ago when I first joined Advisors Capital Management. It's in almost all of our equity strategies because it has shown the repeated ability to acquire new technologies to build upon what they originally had when they were spun out of HP by way of Agilent. And they continue to deliver strong free cash flow. We expect them to continue to do that next year because they have their fingers in so many very powerful pies, and they have a deep moat around what they do. Palo Alto, people don't recognize, maybe they don't, how vulnerable systems are becoming because of AI to cyber threats. AI expands the threat surface, and it's going to make Palo Alto, we believe, continue to be one of the most important companies to defend against this. And they have this platform solution we think is going to continue to win new customers in 2026.
Is that one of your big themes for next year? I've heard a lot of people talking about not only AI, but also cybersecurity.
Yeah, it's been a theme for us for a while. We've owned Palo Alto for clients for many years. We do believe that this world is becoming more and more complex, more vulnerable to attacks. The U.S. government has pulled away a little bit from the government efforts to defend. So we think that's going to push more business into the private sector. And yeah, we just don't see this going away anytime soon. In fact, think about it as a utility. Just like you need electricity and water, you need cyber protection in this kind of world.
In terms of the consumer, we definitely saw some strength today. JoAnne, does that continue? I know that you like certain names like TJX and Walmart and so on, but that could go either way, right? That could be a bet on the K-shaped economy getting even more K-shaped, or it could just be a bet on the resilience of the consumer.
Yeah, there's a few reasons to own these kind of stocks in a portfolio, Vonnie, and one of them is because they're very good companies that are well run and they're well placed in the market. TJ Maxx obviously does particularly well actually when recessions come along because people like to save money. People even like it during really great times because nobody loves a bargain more than the average shopper. And so they've seen their foot traffic remain strong, even as their inventory becomes cheaper during downtime. So it's a good name to have in a portfolio for protection, but it's also so well run and so loved by many shoppers that we think it's going to continue to do well. Consumer more broadly is, as you point out, subject to this K-shaped situation. The high-end consumer continues to do well. We like Williams-Sonoma for that reason. And at the low end, there's still going to be a lot of struggles. Wage growth is slowing down, and that is going to prove to be a challenge even as those tariffs potentially bite more on the budgets of low-income consumers.
JoAnne, I want to ask you about the Fed. I know you have consulted for the Fed and many of these, the IMF and the World Bank, big economic powerhouses, global powerhouses. What do they do in a situation where we have strong growth, we have strong demand from this sort of the upper end of the K-shaped economy, but then we have no hiring or even firing, job losses due to AI, where like rate cuts aren't going to move the needle much?
Yeah, Matt, that's a really good point, that the Fed has limited ability to help, certainly at that granular level that you just talked about. The Fed's dual mandate says target stable prices and maximum employment. And so they're going to focus more on the labor market than they do on the GDP numbers. And we know we've lost a lot of labor because of the immigration crackdown. And yet we've seen unemployment rise, that rate ticking up to 4.6%. So they're going to be watching, I think, the labor market data most carefully. And the fact that we have low turnover is not a particularly good sign of the resilience of that market. We know that at the low end, folks are struggling and continuing claims remain pretty high. So that gives the Fed some cover to continue to cut rates. But we think that's only going to affect short-term rates. Long-term rates are driven by deficit. They're driven by, concerns about the long-term growth prospects of the country. So those are more, those are market determined by more fundamentals on the risk side and on the financial stability and fiscal stability side. So I wouldn't expect a whole lot from the Fed in terms of helping boost the economy, but they may very well try to help protect the labor market.
All right, JoAnne, thank you so much for joining us today. That is JoAnne Feeney of Advisors Capital Management. Now let's get a check on the stock market, because we did see futures pointed lower, but that's not the case. Post-open, we have a higher market. In terms of the percentages, we were just 0.3% away from our record in the S&P 500, so we'll have to watch very closely and see will we make it back there today. About half and half, 212 higher, 283 lower. Amazon, Microsoft, Alphabet, some of the points leaders here, but we also have some of the clean tech companies doing well today. Morgan Stanley bullish on those clean tech companies. And then if we look at the decliners, some of those like Broadcom, for example, lower, Apple lower, but we also have some of the crypto companies and crypto-related companies lower, because obviously Bitcoin is selling off once again today. So it was one day up, one day down for Bitcoin. Let's take a look at the groups and see what we have. So we are barely positive, as you can see, but communication services, energy higher. And obviously we're seeing those huge rallies in precious metals and some of the base metals, copper above $12,000 today. So that's going to impact some of those related companies. Real estate index, consumer staples lower for now, but it does feel like one of those unsettled days. So I think we should wait and see what happens in a little bit, Matt, don't you?
Yes. I always think we should wait and see what happens. It's exciting. Coming up, more room to run. Investors are expecting the stock rally to continue next year. We'll tick through the key issues to watch for 2026 beyond the Santa Claus rally. This is Bloomberg Open Interest.
A check on stocks now, 13 minutes post-open. So it looks like fractional gains for the S&P 500 and the NASDAQ 100. A fractional decline for the Russell 2000, which, by the way, has been outperforming the other two indices over the last few days. Bear in mind, the NASDAQ 100 is up 21% year to date, and we are still very close to the record on the S&P 500. So no cause for panic just yet. The VIX is still very, very tame. Time now, though, for our top calls. Some of the analyst action in focus this morning. And first up, TD Cowen cutting Janus Henderson after the firm agreed to be acquired by Trian and General Catalyst in an all-cash deal valued at $7.4 billion. TD Cowen sees limited room for further upside and views the risk-reward as neutral rather than attractive. Next up, Evercore ISI downgrading Coty, signaling a more cautious stance on the beauty company's near-term outlook. Coty announced a major leadership reset as it renamed and named even former Procter & Gamble executive as interim CEO, signaling a push to stabilize the business after years of underperformance. And finally, Levi Strauss is being initiated at Raymond James with an outperform rating. The firm sees a clean growth story with margin expansion driving solid earnings upside.
All right, cool. Throwing a little jeans in there. I hear there's an excellent Japanese denim package floating around somewhere in the sort of Bloomberg Originals stratosphere. We'll have to pull that down. Let's get back to metal, though, away from cotton, because we have gold and silver and copper all hitting all-time highs. Geopolitical tensions and the prospect for more Fed rate cuts are giving gold and silver a boost. Bloomberg News macro strategist Michael Ball joins us now. This has been incredible to watch, Michael. I mean, probably not since in your lifetime, gold hasn't had this kind of rally, right? 70% in a year, and silver up like 140.
Yeah, I mean, I guess I was alive for the Hunts brothers, but don't remember it well. But yeah, it seems like it's almost unsustainable at this point, because what else could drive it higher? And I think that's what people are racking their heads about. And we've talked about positioning now being stretched, either RSIs or call, skew. All that now to me tells you it's just a very tough proposition to buy at this level and expect to have further gains. But look, it's not just the geopolitics, it's not just the Fed. You have a lot of supply and demand issues. There's mining issues, there's production quality issues for silver, which is helping contribute to that outperformance. But overall, you just can't grab as much. There's been underinvestment, and you can't grab as much as you need right now to match the demand, both the physical and the speculatory stuff.
Well, so Ed Yardeni was making the point this morning that it's one thing to look at gold, but central banks, for example, aren't buying silver. They're not buying copper. I mean, what's driving those gains in the sense that, you know, it's not really the industrial production either, is it?
Right. Well, yeah, a little bit, because copper and silver both get the bid from the electrification of all things. Copper clearly the forefront of that push, which we've had now for multi-years. The AI story with the data warehouse, data center build-outs, and all the kind of grids needed to connect them is big on copper, and silver's big on the solar panel stuff. So there is an industrial demand pulse. You got the jewelry side of it too, because as people can't afford gold, they switch into platinum and silver. So there is that retail bid from India and China and everywhere else in the world. So there are actual things in the physical level that give you confidence that this is a trade that has some real fundamentals. But again, I think what's happening is people are chasing on, there's a lot of speculative froth, either in futures or in option markets, which are helping drive this exponential chart look now.
I mean, when I hear about copper, I think of China. Just because it used to be, you know, Dr. Copper. When China was growing copper demand as well, they were building, you know, all the ghost cities and everything. How related is that, and how's China doing right now? Yeah,
so the actual marginal buyer right now is funny us because of the worry of tariffs. So if you look at the COMEX LME spread or even the Shanghai, it's as wide as it's usually ever been. I think we've come off from summer highs as Trump clarified where that tariff rate would be. But to your point, the Chinese industrial production bid is for copper right now has cooled because obviously we know their growth is slowing. Everyone's moving copper here in America. We have the highest inventories we've ever had here, with expectations that that gap, because of the tariff, will be finalized at some point in the future, making it the good trade to do.
Michael, talk to us about the difference between copper on the LME and copper on COMEX, for example, or elsewhere, in the sense that, you know, we saw that squeeze, remember, in London earlier in the year. I mean, have we seen prices continue to go higher even after a squeeze? Isn't that very unusual?
So we had the correction as they had clarification of what the tariff would actually look like, but there's still an uncertainty of where that final rate will be on the processed copper. And to your point, it's come back up after this massive drop. It's an interesting chart if you look at that spread between the two. But, you know, it's all interchangeable. It's just a matter of getting a ship and bringing it over here because it's effectively more economical.
Wow.
You can bring charts, dude. If you want, you know, next time you're on, or functions. If you have any Bloomberg terminal functions that you want to contribute to the program, we'd be happy to show them. Michael Ball writes for the MLive team. You can check out his work by typing MLIV Go on your Bloomberg terminal. Coming up, big banks defied headwinds from tariffs, economic uncertainty, and credit cockroach fears in 2025. We'll look at what's ahead for the sector in 2026 with Herman Chan. That's next. This is Bloomberg Open Interest. This is Bloomberg Open Interest. I'm Matt Miller. Quick check on the stock market here with my chiclets behind me, all in order. S&P 500 actually up 0.1%. So now 4 days in a row of gains. This is the Santa Claus rally, right? It's the last 5 trading days of December, plus the first couple in January, and on average, it's a 1.5% gain. We've already done that, and then some. The NASDAQ up as well. Okay, it's only 0.1%, but better than a stick in the eye. You can see that the NVIDIA shares right now only moving about 0.2%, and this is usually the directional signal that all the indexes on which it's listed need. When it's up, they're up typically. Broadcom, Avgo also trading higher. JoAnne Feeney owned it since it had that name, still has that ticker. MP Materials and Bloom Energy going in opposite directions. You can see MP up 1.33%, Bloom down 2%. Warner Brothers not moving much, but we have, I guess, increased intrigue after yesterday's move by the Ellisons and Paramount. So Warner Brothers up 0.3%, and Walt Disney completely unchanged. but, well, I don't know what to say about it, Vonnie. It's just not moving at all.
Yeah, there really is not much to say.
Weren't we supposed to have light volume and big, huge swings? Isn't that what this is all about, holiday trading?
Where is everybody? I don't know, they must just be watching TV, watching us, Matt. So, you know, there's that consolation. But let's talk banks, because that's one of the areas where we'll be very focused for 2026. Bank of America CEO Brian Moynihan sees a strong U.S. economy next year. He spoke with Bloomberg Wall Street Week host David Weston.
We feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
Well, let's take a deeper dive into the outlook for the banking sector. Last quarter, there were obviously concern about those so-called credit cockroaches. And we have to wonder, are we now in the clear suddenly? Herman Chan, senior U.S. bank analyst for Bloomberg Intelligence, joins us. On that note, you know, was too much made of the cockroach comment, or is this something that's percolating and that might blow up at any time, but it could be 5-10 years down the road?
Sure. So we've seen in the third quarter earnings last quarter that they were really idiosyncratic. The First Brands exposure, the Tricolor exposure really affected a handful of the banks, but overall credit quality across the banking system is really solid. We're seeing really strong consumers continue to do well with paying their bills, and we're seeing early credit indicators like delinquency is really stable. So we're actually pretty sanguine about credit quality going into 2026.
All right, so financials have done well. Do you expect them to continue this kind of rally at this level next year?
Yeah, there's a lot of optimism with bank stocks. There's the macroeconomic backdrop's pretty good. We've had lower interest rates and a steeper yield curve. So the steeper yield curve in particular should help banks' net interest margins going forward. So there is a potential for top line growth, not only with margin expansion, but also some better loan growth going forward as well. Banks have talked about increasing loan pipelines across consumer and commercial. And there's expectations for commercial real estate to actually rebound next year after some doldrums over the past couple of years.
What about trading revenue? Because it's been phenomenal, right? And we should get a lot more things like AI issuance next year, a lot obviously of government issuance as well.
Right, so those are the two factors that are supporting trading going forward. Keeping in mind that over the past couple of years, trading's been up double digits in 2025 and 2024. So sustaining that growth trend might be a bit difficult, but overall, trading revenue should be very solid going forward. And investment banking also as well, we've got some macro trends with increasing merger activity and then private equity and financial sponsors really coming back into the market. So fee income line should be really solid across the big banks.
All right, Herman.
It's all good to me.
Yeah, great having you on the program. Thank you so much for joining us all year, and hopefully you'll continue to be on Open Interest in 2026, which he kind of has to because he's on contract here. Herman Chan of Bloomberg Intelligence. Coming up in the next hour, Shana Sissel of Banrion Capital on concerns over an AI bubble. Emily Bannister of Wellington Management on private credit. We'll ask her about those cockroaches. And the Points Guy founder Brian Kelly on holiday travel because it's almost Christmas. This is Bloomberg Open Interest. We are 30 minutes into the trading day on this Christmas Eve. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Vonnie Quinn. And those fractional gains are turning into fractional losses right now. Obviously, we got some data earlier this morning, the Q3 economic growth data. Some of it was better than forecast, and maybe that's implanting itself into traders' minds. Maybe they're not expecting cuts as soon as they might otherwise. The S&P up just like 3 points, and the Nasdaq is now actually flat. Bitcoin trading just above $86,000 a coin. That'll tell you something. But the VIX isn't moving. It's still just around 14.
I try not to look at Bitcoin ever since I lost my password.
I don't think you lost your password. I think you sold it too soon.
I am looking at consumer confidence data breaking right now, and it's a little bit less than expected, but better than the prior reading. So, Conference Board Consumer Confidence, the headline index is 89.1. That's up from 88.7 on the previous reading. It's a little bit lower than the survey, which was at 91 even. In terms of the present situation, we're getting a reading of 116.8. In terms of expectations, 70.7. And I guess present situations is a little worse than previously. Expectations a little better than the previous number. But I think none of this is as important as, well, the GDP number we got. It is backward looking. It is third quarter data, but it was a blowout number. 4.3% was the economic growth for the United States, according to the BLS in the third quarter. So that's pretty strong.
And can I just point out as well that the previous reading was revised up again to 92.9. So, I mean, this data is a little bit all over the place. Yeah, the previous consumer confidence reading, which was, low, was revised up to 92.9. So it's very difficult to know what to make of all of this.
Yeah, it is really all over the place, especially after we got that inflation data, the CPI, that was so much lighter than expected because of zeros put in for October rents. Let's get to Bloomberg Federal Reserve reporter Katerina Sareva to help us wade through this noisy data. Katerina, what do you make of, first off, the consumer confidence numbers?
Yeah, I mean, look, any movement in the upward direction is good, right? So I think that's a little bit of a positive there. We had gotten some really tough readings this fall that showed a lot of pessimism among consumers. So I think this is good that it's reversing at least a little bit on that. And then I think that GDP data that y'all mentioned kind of further reinforced that the consumer has been doing pretty well. I mean, that blowout number was really driven by really robust consumption.
And we got the Richmond Fed Business Conditions Index as well. And while it was negative, Katerina, I mean, it wasn't as negative as the previous month, so it improved, if you like, to -11 from -15. And the manufacturing improved to -7 from -15. There's really nothing that's that weak about this economy except maybe a labor market that's a bit stagnant. Is that fair to say?
I think that's exactly what's going on, yeah. I mean, the economy is growing pretty strongly, right? We see it in the GDP number. So if you look at kind of all the headline numbers, those are flashing positive signals. But yeah, you're right, hiring has been pretty flat. But firings have also been flat, right? We're in this low hiring, low firing environment. I think that will likely, it might turn out to be that it was just businesses waiting on the sideline, not really wanting to make big decisions as they waited to see how tariffs and other policies played out. I mean, we'll have to see going into next year, but that's kind of what it seems like right now. Not negative, just kind of this holding pattern.
All right, Katerina, thanks so much for joining us. Katerina Sareva doing some double duty today. Really appreciate that, covering the Federal Reserve for us. Let's bring in now Shana Sissel, Banrion Capital Management founder and CEO. And Shana, there's a lot of economic data this morning, some of it pretty delayed. How closely are you watching this data, and how important is it to you?
Well, obviously, I'm watching the data. Data like this is always important because it informs the Federal Reserve on what their decisions will be in the future. But it is delayed. It is somewhat warped by the fact that it is data that's coming in from the third quarter during the government shutdown. There's some, as you pointed out, zeroing that's going on in there that isn't reflective of reality. And so you got to take it with a grain of salt. And as you also pointed out, it's backward looking, so it doesn't tell us much about the future. You got to look at more of the leading indicators like consumer sentiment and things of that nature, which are better than expected, but still, not great. And so all of those things have to be kind of put together in a mosaic to figure out where we're going in the future, because the past is great to tell us where we were, but it's not really helpful in determining how things play out from here.
Shana, I know that you concentrate on alternative investments, but I'm curious as to what you look at in the public markets for signals of what's to come. So do you look at crypto, for example, which has had a wild ride just this last 2 days? Do you look at the VIX? I mean, what are those signals?
Well, crypto to me is an alternative. I mean, it might trade in the public markets, but it's an alternative asset class. So yeah, we pay attention to it. It's in terms of looking at signals overall, though, in the public markets, you're just looking for overall sentiment, volatility. You want to look at the options markets since they're an indicator of what goes on in the future. I've never really felt the VIX was a good reflection of actual true volatility. I'd rather look at the options markets for that. I know the VIX is somewhat based on that, but you just really want to pay attention to what people think are going to happen in the future. And sentiment's a good way of doing that. Looking at momentum signals is a good way to do that. We've seen some stepping back from those future trends, AI, robotics, things of that nature. Some of those stocks have come back. To me, that's a signal that people are a little concerned about the future. If anything, that makes me a little more bullish on some of those names. But overall, that's what I'm paying attention to. And the volatility of the data is something I'm also paying attention to, because there's not a lot of data that suggests that we have a poor economy here. But there is volatility within that data, a lot of restating previous data points, previous time periods. A lot of the data is conflicting in some ways, again, taking with a grain of salt because it's through the government shutdown. But nonetheless, those are the kinds of things I pay attention to when I'm looking at how I would put together and position a portfolio going forward.
Well, and valuations, right? I mean, you point out, Shana, that after the recent sell-off that we saw in the big AI tech companies, you really haven't seen multiple expansion. So do you continue to buy those? Do you put additional capital to work there?
Yeah, I mean, those are definitely things you'd be looking at. There hasn't been multiple expansion, but there should be. And when it comes to valuations, the actual number is less important than the direction and the expansion of that number. So as you pointed out, we haven't seen a lot of multiple expansion in a lot of these names. And that, to me, is a buy signal. Again, as long as you're not seeing multiples shrink, they're kind of staying stagnant. You're not necessarily seeing the expansion that you would expect. To me, that would be a buying signal. And again, when you look at a lot of people like to try to compare today's period to the tech bubble, like 99, 2000. One of the things you saw then that you're not seeing now, but would be on my radar screen, is if these companies started to restate their earnings outlook and bring them down or miss more frequently. Those things would be my concern of a potential bubble burst, but we're not seeing that. So it's very hard for me to kind of get behind the whole we're in a bubble argument because the actual evidence behind it and the valuations, the multiples and the earnings outlooks aren't suggesting that these companies are concerned. I do think that's somewhat of a psychological thing. I think that a lot of senior executives in a lot of these companies have decided to under promise and over deliver. But I don't necessarily think that's a bad thing for markets in terms of being able to keep us out of bubble territory.
Shana, thank you so much for all of that this morning. This is Shana Sissel of Banrion Capital Management. Let's get a check on those markets now. The S&P 500 turning negative, down about 0.1%. That's not to say that there aren't plenty of stocks higher. Gilead Sciences, one of the better performers, up 2%. We have AutoZone as well, up 1.8%. And then plenty of the miners and copper-related and steel-related companies like Freeport-McMoRan. That stock is up 1.25%. But almost 350 stocks are lower, and some of them are crypto-related. Some of them like Robinhood, Coinbase, and so on. Norwegian Cruise Lines. It's really kind of all over the place trading today. And then in terms of yields, I just want to point out that the 2-year yield is up about 3.5 basis points at 3.54. The 10-year yield up 2, and the 30-year yield up just more than 1. So a little bit of curve flattening today, Matt.
All right, let's get a look at some of the single stock stories this hour. You mentioned a few. Novo Nordisk getting a big boost after winning approval to sell a pill version of its blockbuster obesity shot, Wegovy, in the U.S. We're going to get more on this story later this hour. Shares of Huntington Ingalls rising after President Trump announced a new class of warship that will be called, of course, the Trump class. The Navy is pursuing a new frigate that's going to be built by that company. And gold, silver, and copper mining stocks. Well, you see a little bit of a mixed trade here, but the underlying metals all hit record highs today amid rising geopolitical tensions. Coming up, Emily Bannister of Wellington Management says the private credit evolution is just getting started. She joins us at the desk to discuss her 2026 outlook next. This is Bloomberg Open Interest. Let's get to high interest now. Look what's making headlines around the world. Denmark is rebuffing President Trump's renewed calls for the U.S. to take over Greenland. Denmark's foreign minister summoned the U.S. ambassador, saying Greenland is not for sale and an attack on the territory would be an attack on Denmark itself. Greenland's leader echoed that the island belongs to its people as European allies voiced support for Danish sovereignty. ServiceNow is buying cybersecurity startup Armis for $7.75 billion in cash. That would be ServiceNow's largest acquisition ever. The deal would strengthen ServiceNow's push into security and AI-driven enterprise platforms, and it's expected to close in the second half of next year, pending approvals. Luxury apartment construction is pushing rents down in some major U.S. cities. New high-end buildings are luring wealthier tenants, forcing landlords of older units to cut prices, in some cases by more than 10%. Cities that built the most apartments include Austin, Phoenix, and Denver. They saw the biggest rent drops, while markets with limited construction barely budged. Vonnie?
Turning to our credit segment now, Emily Bannister, head of private credit at Wellington Management, recently released her outlook for the year ahead, writing, quote, "After years of being a known quantity, private credit has become one of the most dynamic parts of the financial markets, and we believe 2026 will show its evolution is just getting started." Emily joins us now. All right, that's a big teaser. So what can we expect in 2026? I mean, this market is growing like bamboo at the moment, to use a phrase that's in the media. What are we supposed to expect?
Yes, well, we see continued growth, which does sound ambitious given the growth that we've seen already. But really what we're seeing is that the growth is going to shift. It's going to move where we're growing within the private credit market, because the biggest trend that we've seen over the last 1 to 2 years is that the private credit market is really broadening. It had its roots in the below investment grade corporate lending market, but it has extended substantially, and we're now seeing a much bigger asset class that lends to many different quality and collateral types, and that really gives us an opportunity to grow in new areas.
So is it just broad growth that you're seeing, or are there any particular spots that you think are worth highlighting?
Yeah, we're seeing some unique funding gaps in different parts of the market. I think as it broadens, private credit is going to be less of one thing, less of a monolith, and more of a series of different pieces of the credit market and credit cycles. And some of the opportunities that we think are really exciting right now are, for example, in the investment grade private credit market, which has been extending, becoming more interesting for many borrowers and clients, and a place where we think the demand for capital allows lenders to really get great opportunities and structure some unique solutions.
Is that why we saw the take private of Janus Henderson, and are we going to see more of those into 2026? Because as private credit expands, obviously the need for permanent capital is expanding too.
It's true that the private credit market offers long-term capital, and I think as a private credit manager these days, you really have to be a solutions provider. So thinking about where does the market want to move. The interesting thing too right now for private credit is that we can be solutions providers on both sides, both to borrowers that want to have innovative new structures and do new things, and also for clients who are seeing a need for income, and you can provide solutions in new ways, for example, public-private solutions.
So how much is the AI data center build out behind this? Because we see, single companies saying we're going to spend $85 or $100 billion next year, or we hear OpenAI saying they have $1.4 trillion in spending plans, and that's obviously got to be financed broadly.
It's certainly one of the places where the market is looking for solutions and where private credit will have a role. It's also, I think, a really interesting example of why we're building out private credit at Wellington in general. As you know, we're a $1 trillion asset manager that has a presence in public and private equity, also public and private credit, global and local perspectives. And when you think about something like AI, that's a market where you need all of those lenses to really understand it.
Our venture capitalists saw the early innovations in some of the data and business models, and now it's traveling down, and you're seeing the next build out is really in the data centers and in providing that compute. And it's getting funded in both public and private markets. So you want all those lenses to understand what's going on and really get a full picture to make the decisions.
Sounds like you have it there at Wellington, but are you not concerned that a lot of this is based on public trust? And if something happens, and we were close to that a few times this year, that public trust will go away?
Trust is incredibly important in financial markets. I think transparency, recognizing what the different funding markets offer, and also recognizing that there will be winners and losers, and you want to be selective and be aligned with your clients as you go through these new areas.
So with all of that experience at Wellington, what does this AI bubble debate look like to you? I mean, are we still in the early stages? Are we going to see returns starting, in 2026 that it will impress? I mean, how does the overall picture look to you?
We're seeing it unfold across markets. So I think the answer will be different in different parts of the market, whether you're in some of the venture, innovative, technology-growing companies, whether you're funding the utilities that are providing the power or thinking about the data center funding. The thing that's been exciting about seeing this debate unfold at Wellington is that we have a morning meeting every morning where our investors attend and real-time debate the pushes and pulls of all of this. And I think that helps us get to that fuller picture, get to an answer where we can do our best to navigate for our clients.
How can you be certain of the returns and the returns you're going to get? I mean, aren't you depending on a certain percentage return? And what if it doesn't materialize?
Well, you can never be sure of the returns that you'll get in the future, but what you can be sure of is the work that you do to understand the markets to try to move things in your favor. And within private credit, one of the very interesting levers you have is structuring the deal. So putting in things like covenants where you can monitor how a deal is doing and have options as you go forward to make good decisions for your clients. So I think the structuring as we go forward will really help separate the winners and losers.
Do you think it's a safe asset for mom and pop, for retail investors to get into? I mean, should I have private credit in my 401k?
I think that with good transparency, with good communication about what the benefits and risks are of the asset class, it can fit for a lot of different clients. We're seeing many new clients coming to this asset class if they have a very long-term view and the liquidity is appropriate for them. As I said, private credit's no longer one thing, so I think there are places within private credit that fit better for different client types.
Mark Rowan went on a bit of a spree trying to bust some what he called myths about private credit. I'm not sure that all of them were myths, but one of them that he said was a myth was that these are not rated and that they are actually rated, all these ratings companies. Who do you use? Do you do your own ratings?
Well, it's, as we discussed, it's a very broad asset class. And so within the asset class, you can absolutely find investment grade notes that are rated by private letter ratings, by the NAIC, the insurance regulator. You can also find deals that are not rated. There's a big diversity. At Wellington, we believe in doing our own credit work, regardless of whether the deal or issue is rated or unrated, and really trying to come to our own view by understanding the dynamics of the deal and of the issuer.
Well, Emily, I hope you can come back and join us in 2026 because it's clearly an area that we're focused on here at Bloomberg and on Open Interest specifically. Emily Bannister there of Wellington Management. Still ahead, Novo Nordisk shares jump after the FDA clears a pill version of its Wegovy fat loss drug, a major win in the anti-obesity race. Details later this hour. This is Bloomberg Open Interest. Let's get a check on the stock market on this day before Christmas. We are looking at really very little change. So we're up about 5 points, as you can see from the move screen. This, as you probably know, is, I think, the most dynamic way to look at any index because of the wealth of information here. You can see that breadth is to the downside, 311 stocks falling, 191 gaining. And in terms of the gainers, NVIDIA is on the upside. So even though far fewer stocks are up than down, we're still showing a green because NVIDIA is so heavily weighted. You got Google as well as Amazon, Google, Microsoft, all to the upside. JP Morgan, Broadcom, Facebook. On the downside, Oracle right now, it's only down 2%, but it is the biggest point deduction. AppLovin, which is one of my favorite names for a company, right now down about 3%. Tesla on the downside, but still near an all-time high. You can see Walmart, Apple, and Pepsi all weighing on the index. Take a look at the breakdown in terms of the industry groups. Right now you can see we're a pretty even split. Hyperscalers up, utilities up, financials up, but you've got consumer staples, real estate, and materials down. Hey, Joe, should we take a look at the year to date since we're almost at the end? Joe's going to dig that in for us. And now you can see that almost all of the industry groups have won out year to date. Real estate is the biggest loser. I'm going to talk to David Auerbach about that when I see him at Fish at MSG in the next couple of days. But the hyperscalers, the big winners, no surprise there, 32%, and then IT up 24%. Coming up, if you are flying this holiday season, you're going to want to pay attention because airlines are cutting perks, adding routes, and changing loyalty rules. We're going to talk to Brian Kelly, the points guy, next. This is Bloomberg.
The points guy, Brian Kelly, offering up tips to save on your holiday travel. He says flexibility is your best friend, especially when planning a last-minute trip. Kelly also believes Google Flights is one of the most valuable tools for travelers. For more, he joins us here at the desk. Brian, of course, is also the author of the book, How to Win at Travel. So, Brian, first, this idea of Google Flights, how do you use it to best maximize its value?
Yeah, so the best way to get a deal is, so in google.com/flights, it's a free tool. There's a feature that's, you click Explore. And this is where I tell people, so it's the wintertime in New York and you just want to go to the Caribbean. You can actually put New York to the Caribbean. And you can put, if you have a certain week you want to go, or just say, hey, one weekend in February, these dates. It's very flexible, and it reverse engineers. It'll show you a map of the Caribbean. You can sort by business class, nonstop, and that's where you find the best deals. Instead of searching one by one each and every route, you've got to use technology to help find the best deals.
Can you click through from there and buy your ticket?
Yeah, and tip, always book directly with the airline, as we saw this year with the meltdowns. And because if you book through an online travel agency, it's so much more complex. You know, the airline cancels your flight and they're at the gate and they're saying, well, you got to call the online travel agent. So book direct.
By the way, Brian, why aren't you offering these kind of services? And especially with your business, I would imagine you could use AI on your website.
Absolutely.
To help people solve problems much quicker.
I mean, at the Points Guy, we have an AI strategy. We have a lot. We're overhauling the website as we speak. We have a great new CEO who started this year with us. So stay tuned for more. But there are concierge services. So as the Points Guy, when I started in 2010 working at Morgan Stanley, I was a travel agent for points. I would charge people $50 a ticket and use my knowledge. There is a tool out there now, point.me/concierge. And if you have a bunch of points and you like to travel, you don't have the time to figure it all out, you can pay, I think it's $200 a ticket. But if you're saving thousands, which the service can do, it can pay for itself. So for the busy executive, you know, getting that concierge can be a good option.
You get different deals if you use points versus if you use cash.
Yeah.
I want to know what are the best deals out there that now that you identify.
So look, points, there's been devaluations going on, but I want to remind people, when you book a ticket using your frequent flyer miles, they are refundable tickets. So when you're comparing and contrasting, I love using points still, you know, and some of the best deals out there, Air France Flying Blue. That program has 60,000-mile business class award tickets to Europe all next year. That same ticket, if you use Delta, it's going to be 400,000 points. The U.S. airlines, United, Delta, American is the best of the big three, but they're all increasing the amount of miles. The foreign programs, I'm going to St. Moritz next month. Swiss Airlines, if you book via Air Canada, which is a transfer partner of Amex and Chase, 70,000 points business class one way for $4,000 ticket. So there is still tremendous value with, you know, transferring points. And remember, if I need to cancel that ticket to Switzerland, my kid gets sick, I get all my miles back. But if I paid $5,000 for that ticket, I'm going to get a voucher on Swiss Airlines that I may or may not be able to use. So points still offer tons of flexibility, and the airlines last minute open up tons of seats.
Yeah.
I'm going to Sydney this week, and I've been monitoring. There, even last minute over the holidays, the airlines, American Airlines opened up a ton of upgrade space if you have miles. So for last-minute procrastinators, when you buy tickets, the airfare is through the roof, but it can be the best time to redeem those points.
When you go to St. Moritz, do you fly into Zurich or to Munich?
Well, so Zurich is the easiest if you want to take the train, but Milan is only 2.5-hour car ride. So actually, after St. Moritz, I'm going to go to Milan, where the Winter Olympics are. But even that weekend of the opening games for the Winter Olympics, Emirates to JFK Milan has business class award availability for like $200 and 60,000 miles. So I want to re-emphasize to people, the points game is not over, but using tools like Point Me, there's another tool that I love called Seats.Aero, A-E-R-O. Seats.Aero allows you to scan up to a year in advance. So if you want to fly Emirates business class to Dubai, you can actually search for a year and it'll tell you what days there are seats available. So once again, you can reverse engineer your trips based on where the award availability is.
I'm fascinated by the fact that you just said airlines are opening up a bunch of seats.
Yep.
I didn't realize it was that dynamic, that maybe they were holding back seats till the last minute. And also dynamic pricing. Apparently, I'm getting prices on an individual basis. And I don't like that.
No, and so Delta this year, they said, 2% of their airfare was dynamically priced via AI. They're going to move to 20% in 2026. They say that to the consumers, don't you worry, we're not going to use your personal data. But I think, as consumers, you've got to be smarter. This year, we saw the airlines now start charging more for your single passengers. So all the 3 big U.S. airlines now, if you're flying by yourself on vacation, you can pay up to 60-70% more, because what they're trying to do is target business travelers who have to pay. So if you book, always what I recommend is search for 2 tickets. Sometimes it's annoying to fly with someone else, but you can save a ton of money. So, family travel, sometimes it used to make sense to book separately in case one person couldn't go, but when possible, book 2 or more, and that can save you a ton of money.
I like to fly without my kids.
It's worth the premium.
Hellish. Yeah, you and I are in the same boat in terms of progeny, right? Mine are 5 and 2, and it's just the worst. It's a nightmare to fly with these kids. How do you do it?
Well, I've got a 3-year-old and a 1-year-old, and this year we're about to get my 7th continent. My 1-year-old will be the youngest person in the world to go to all 7. How do I do it? Well, I'll be honest, I travel with an amazing nanny who loves to travel, so we have a good system set up. But honestly, using points for business class has been a game changer. So I know people, can I bring kids in business class? I mean, my kids are well behaved, but yes, it is your right, and having extra space makes...
Your kids aren't screaming the whole time?
Look, any kid's going to scream. My kids are pretty... and I do recommend people start them young, and especially the first year of travel is pretty easy. They sleep most of the time anyway. But using points and actually getting extra seats for kids, even though they can sit on your lap for up to 2 years, my kids are big, so I started getting them their own seats, which was great. Let them sprawl out in a little bed, and they sleep the whole time.
Very cute. Now, talk to us about domestic destinations. Where are people traveling within the United States?
Yeah, so a huge trend we're seeing in 2026 is people still want to travel, but there is still a little trepidation. Even with the markets going up, people are nervous. So we're seeing, the pandemic, we saw everyone going to national parks, but we're seeing that surge now. Bozeman, Montana, Jackson Hole, Key West. So Alaskan cruises are through, those bookings are way up. So I think people are a little nervous about international. I think people have also been so sick of paying those premium prices to go to Europe the last several years. We've now seen that Italian hotel room go from $1,500 a night, $4,000 a night, you go peak summer. And also 60% of people we surveyed are planning on shoulder season. And I've been preaching about shoulder season for a long time. Europe in May is way nicer than in August. And you go in August, it's all Americans. All the locals are gone.
And way too hot.
So why? It's hot, they don't have air conditioning, and you're with all the people you see in America. Count me out.
Speaking of shoulder season, I was just in Livingston, Montana last month. Thought it was going to be way too cold, but it was perfect, and there was nobody in the national park.
No, the national parks in those shoulder seasons of fall and Aspen is beautiful. I mean, so think outside the box. Don't just go, Christmas week to Aspen and then you're shocked at the prices. I know it's harder when there's...
instead.
Brian, great having you on as usual. Thanks so much for joining us. Merry Christmas to you and yours. Brian Kelly there, the points guy. Let's get a check on the markets today. After 3 days of rallies, we're looking, at slight gains here. The S&P adding 9 points, the NASDAQ up 7. So not a lot of movement after a blowout GDP number. Maybe concerns some that we won't get the rate cuts that are priced in.
Let's get a look now at some single stocks moving at this hour, because there are some that are moving quite substantially. Not Tesla, though, although it is very close to a record, up about down actually about 0.25% right now. The company convincing a Texas judge to transfer a lawsuit over self-driving vehicle patents to Northern California. So that would be a win for Tesla.
Interesting story there. Shipping company Zim says it's continuing to evaluate proposals from potential buyers, and that's enough to drive the stock up 7%.
And a recent SEC filing showing a Rocket Lab insider sold shares worth more than $1 million.
Coming up, branding battleships. President Trump announces a new Trump-class warship, pitching a golden fleet to revive U.S. shipbuilding and counter China. We'll get the details next. This is Bloomberg Open Interest.
As Commander-in-Chief, it's my great honor to announce that I have approved a plan for the Navy to begin the construction of 2 brand new, very large, largest we've ever built, battleships. You know, you used to build the Iowa, the Missouri, the Wisconsin, the Alabama, many others. We had big battleships. These are bigger.
President Trump announcing the Navy will build a new Trump-class battleship called the USS Defiant. It's part of the White House's push to modernize a fleet that's faced years of cost overruns and delays. Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Research Analyst. Wayne, correct me if I'm wrong, but analysts are saying that these are not actually going to do us any good in terms of defense. These are not what's needed.
I absolutely agree. I think that when you look at the size of battleships, they are too big and too slow to be able to deal with navigating away from, whether you're looking at China, you're not gonna be able to get away from their air defense capabilities as well as their missile capabilities. The U.S. Navy, for the most part, has been going towards the exact opposite. They're going towards distributed maritime operations. They're going after smaller ships. They're trying to procure 134 uncrewed surface vessels that are smaller, more maneuverable, and being able to actually spread out their footprint instead of trying to give China an even bigger target.
Wayne, I'm glad to have you on. You, of course, have a lot of experience in the military and at the Department of Defense. And I've been kind of following this story for the last couple of days that we're chasing an oil tanker. It's been like 72 hours. These are giant and they move slowly. How long does it take to find an oil tanker?
I don't think it's so much about trying to find the oil tanker as it is just trying to figure out what are the best resources necessary to be able to do that, right? The ocean's obviously fairly large, but it comes down to command authority and decision authorities as to whether or not you're trying to use Coast Guard, national security cutter vessels, or whether or not you're trying to use a destroyer or a frigate to be able to go after and find it. So I think that's more along the lines of if they truly wanted to, they'd be where they needed to be. I've talked to some of my folks in the Navy, and they agree on the assessment. Is like, if we really needed to take this thing down, I think this is more on the policy and the political side than it is on a U.S. military side.
Well, I just wonder, I see the pictures that President Trump posts of these Trump-class battleships, and I don't know if they're maybe too big for this kind of pursuit, but you do see lasers coming off the desk, so they look like they're pretty high-tech. How, sorry, I'm getting a message from a viewer. It's the Department of War, not Defense. Is that official? Is that official, Wayne? Is it really the Department of War and not Defense now?
It is not. We're still calling it Department of Defense until Congress actually makes that official. So until it's written into the National Defense Authorization Act, we are still going with DOD. A lot of times you'll hear it just intermingled to DOD or DOWAR, and we'll use both.
All right. So sorry to my point though, which is that we're increasingly using really high tech stuff, and that's kind of the fun part of looking at one of these Trump class battleships. How high tech are they?
Well, for high-powered microwave and high-energy lasers, they really are. The Department of Defense, Department of War has gone a long way over the last couple of years in their technology roadmaps to try and reach 1 megawatt power for high-energy lasers by 2030. A lot of the primes that are involved in this, they are doing very well on this. I don't think they're actually going to slip on that because I think the science that is tied to it, and I think the Navy is going to be the lead on that because they have access to so much power that's necessary with nuclear-powered, aircraft carriers and so on. They have the means for reliable power source to be able to do that. The more that you try and make that a mobile force for like Army tactical vehicles and things like that, you're seeing that size, weight, and power is going to be that limited force.
All right, Wayne, thanks so much for joining us. Really appreciate your time. Wayne Sanders there of Bloomberg Intelligence. Sticking with defense, the shift in modern warfare is changing. Many stocks in the sector are making their way up besides the big players that you know, like Lockheed Martin and Raytheon. Joining us now is Bloomberg equity reporter Matthew Riven, who wrote a great piece on the Bloomberg terminal about this a couple of days ago. Matt, thanks so much for joining us here. Which are the sort of high-tech, maybe smaller or less well-known in defense players that are doing the best?
Thank you so much for having me on. There are a few that I would call out, and they fall into a few different buckets. So one of the technologies that has really proven itself on the battlefield in Ukraine and has also been a high priority in the Trump administration is drones, unmanned systems that are cheaper to field on the battlefield than something like a fighter plane. So you have Kratos is a company in that sector, also AeroVironment, two of the leading players. Satellite intelligence is something that the military has been very focused on. Planet Labs and Black Sky Technologies, two companies that field those kind of capabilities, both doing AI image analysis as well. And then, of course, a company that we hear about in both military and civilian contexts, Palantir Data Analytics. They work with the Department of Defense, or as they're styling it, yes, the Department of War, on several different capabilities, maybe most notably a system for automatically finding targets on the battlefield. All of these stocks have rallied in recent years, but the Trump administration has made these kinds of capabilities a priority, and those rallies have accelerated this year as a result.
And it's global defense stocks that have rallied, and not just the upstarts too, Matthew. What's behind that? Are we expecting wars to break out all over the place?
Well, of course, everyone's hoping that there won't be major war, and it's impossible to forecast exactly. That being said, the way that countries are preparing for war in the future has changed. Investors really do have Trump once again to thank for this. If the administration has pushed allies in Asia and Europe to spend more on their own defense, they have harshly criticized European governments and signaled an openness to Russia's positions in the Ukraine peace negotiations. That's raised fears that the U.S. isn't as committed to ally security as it used to be. All of this has countries around the world making plans to boost defense spending. There's also a pretty strong spending environment in the U.S. That's been a tailwind for all kinds of defense players this year all around the world.
All right, Matthew, great story on the Bloomberg. Highly recommend people check it out. Thanks very much for joining us.
Thanks
Matthew
for having me.
Griffin there wrote the story highlighting a number of companies like Planet Labs, like Palantir, and those on the cutting edge of cyber and high-tech defense. Coming up, Novo Nordisk lands a major win, getting approval for its obesity pill. More on Novo next and its battle with Eli Lilly to fight fat. This is Bloomberg Open Interest.
For the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly, and 1 in 3 people are going to actually reduce up to 20% weight loss. I think that data speaks for itself.
That was Novo Nordisk CEO Mike Duster speaking to Bloomberg earlier this morning. The company receiving approval to sell its pill version of its blockbuster obesity shot Wegovy in the United States. That news sending the stock higher by 8.5% right now. Joining us with more is Bloomberg Health reporter Madison Muller. So a huge relief, and months before Eli Lilly is expected to get similar approval for a pill for its drug. The CEO told us the starting dose is going to be $149. Does that mean that this will open this pill up to a lot more people and a lot more clients for Novo Nordisk?
I think that's definitely the hope. I mean, we know that both Eli Lilly and Novo Nordisk, actually, as part of their agreement with the Trump administration, said a few months ago that they would offer the starting doses of these weight loss pills for around $150 a month. And that's a lot less than the shots that are currently on the market, even with the discounts that Novo and Lilly have both started offering on cash pay versions of their shots. This is still, potentially going to, like you said, open the market to many more patients, not only in terms of affordability and access, but also just the patients that may be a little bit needle shy or who are scared of injecting themselves. This is a potentially easier to take option for those people as well.
Well, and the logistics also easier, right? Because I imagine you don't have to keep these pills refrigerated. You can just throw them in your DOP kit and move around with them. What's the story with how you take them? Are they like 0.25 milligrams? You titrate up the same as you do with the shots? Do you take them once a week or is it every day? How's the mechanics of this?
Exactly. So we are titrating up just like with the shots, just because there are these nausea, vomiting, diarrhea, gastrointestinal symptoms that all the GLP-1 drugs really can cause. And so by titrating up, starting at a little bit of a lower dose and then upping in strength is one of the ways that drug makers have found to hopefully mitigate some of these side effects. With the pills, you have to take them every day. Novo's has a bit more restrictions than the one that Eli Lilly is developing. The Novo pill has to be taken in the morning with just a sip of water, and then people have to wait around 30 minutes before eating or drinking, whereas Lilly's pill does not have those same restrictions. So, for people who don't like to remember to take a medication every single day, it might be a little bit harder than the shots that are taken weekly. But for other people, the pill is just so much easier.
Do we have any data performance-wise, how it stacks up against the injection? Is it the exact same? And also how it stacks up against Eli's Zepbound and Mounjaro as well?
Exactly. I mean, the pills have been a long time in the works. And one of the challenges that drug makers have had is making these pills as effective as shots. Just the way that the medication works, the shots are going to be more effective. But even though, they've had these challenges, Novo and Lilly have been able to overcome them more recently. And we are seeing pretty good efficacy with these pills. In the trials that were based on the approval for Novo's pill, it was around 13-14% weight loss, which is pretty good, but it's still not quite as effective as the shots themselves. So they're thinking that these might be a maintenance option for some people who want to go off of the shots. They've hit their goal weight and they just want to maintain that. Maybe they can switch to the pill. But for some people, they are going to be a good initial therapeutic option. That being said, it's not quite the same efficacy again as the shots. And then Eli Lilly's actually was a little bit less than that. It was around 11%, 12% weight loss in trials. And when we're talking about the shots, we're talking about up to like 20% weight loss with Lilly's Zepbound.
Madison, great having you on the program. I hope you have a Merry Christmas. Madison Muller there covers the obesity drugs for us. Coming up tomorrow, Nimrit Kong of Northstar Asset Management, Margie Patel of Allspring Global Investments, and the real CEO. This is Open Interest.